Hello, good day. You are welcome to another session of OA Accountancy Staff. In today's video, we'll be looking at the final part of the double entry principle or the golden rule in accounting. This part entails balancing of an account and extraction of a trial balance. If you are new to this channel, I will encourage you to kindly subscribe and also share for the benefit of others. An account is said to be balanced if the total debit entries of that account and the total credit entries of the same account agrees. An account is balanced at the end of every period in support of the periodicity concept. So this periodicity concept in simple terms states that because information needed by users of accounting information are normally for a certain period, it becomes necessary that financial statements should be prepared periodically to ensure its use. And in balancing of an account, we have about 4 to 5 easy steps that one needs to follow. The first step says that in balancing of an account, you need to first ascertain the total debit entries of the account. Secondly, you have to ascertain the total credit entries of the same account. Again, you close off both sides with a greater total. You find the difference among the two totals and put the difference on the side with a shortage and you call it balance down. Then finally, you bring this same difference to the opposite side after the totals and you call it balance brought down. So these are the easy steps that one needs to follow in balancing of an account. By this, let's assume that these are accounts. Let's assume these are accounts, and on the debit side, these are currency sign. And on the debit side, let's say we have sales of $100,000. We have, let's say, loan received for $90,000. And on the credit side, we have purchases for, let's say, $150,000. We have electricity paid for, let's say, $20,000. And again, we have, let's say, motor expenses for, let's say, $20,000. When we say the total debit entries, it means the summation of all the debit entries of the account, and that of the credit entries or the total credit entries is also the summation of all the credit entries of the same account. So we are saying that to balance off an account is to ensure that the total debit entries agrees with the total credit entries. So now let's sum up all our debit entries and that of our credit entries. So in summing up our debit entries, we have $190,000. So let's dot it somewhere. $190,000. And that of our credit entries is also $190,000. So in this case, the total debit entries is automatically agreeing with that of the credit entries. So we will close off both sides with the $190,000. And by this, we are done balancing of our cash accounts. But mind you, this is not always the case because there are some circumstances where the debit entry will not automatically agree with the credit entries. So let's take these motor expenses off. And now let's try to balance off this cash account. So we are saying that in balancing of an account, you need to first ascertain the total debit entries, then you dot it somewhere. You ascertain the total credit entries, then you also dot it somewhere. Then after that, you find the one which is greater and you close off both sides with it. So our total debit entries remains $190,000, but since we've cleaned off the motor expenses, which was $20,000, our total credit entries will no more be $190,000, but $170,000. So our total credit entries is now $170,000. So now we have to close off this cash account. So we are saying that after ascertaining the total debit entries and that of the credit entries, then you need to find which side or which total is greater. After finding that, then you close off both sides with a greater total. So we will close off both the debit and the credit side with a $190,000 because $190,000 is greater than $170,000. So we will close all both sides with $190,000. After that, then you find the difference among these two totals and put the difference on the side with a shortage and call it balance down. So we find the difference between these totals and put the difference on the side with a shortage. So the difference is $20,000. So you put our difference on the side with the shortage, and in this case, our credit side is the side with the shortage. So we put our difference on the credit side and we will name it balance C/D. In accounting, whenever you see balance B/D or B/F, it means balance brought down or brought forward. And whenever you see balance C/D or C/F, it means balance carried down or carried forward. The balance brought down or balance B/D or B/F is always at the side with a higher total, and that represents the opening balance in the next accounting period. The balance C/D or C/F, on the other hand, also represents the closing balance of an account, and it is always on the side with a shortage. So in this case, our balance CD is on the credit side, and that is the side with a shortage. So automatically our balance BD will be on the debit side, because we are saying that our balance BD is always on the side with a greater total, and that represents the opening balance of the account. So this difference will again be sent to the opposite side after the total, and it will be named as balance B/D or balance brought down. So this same difference will be sent to the opposite side after the total, and the difference is 20,000, and it will be named balance B/D. So initially we said this part entails balancing of an account and then extraction of a trial balance. So a trial balance, on the other hand, is also a list of account balances extracted from the ledgers that's used to prove the arithmetical accuracy of the bookkeeping. More light will be thrown in later part of this video. So since we've already learned how to record accounting transactions in the various accounts in the part 2 of the double entry principle, let's assume all these transactions have already been recorded and we are required to balance them off and extract a trial balance. So the steps highlighted earlier will guide us in balancing off these accounts. So the first step in balancing off an account says that we are to ascertain the total debit entries of the account. So in balancing off our capital account, we are first to ascertain the total debit entries of our capital account, and the total debit entries is 0, since we do not have any entry recorded on the debit side of the capital account. So our total debit entries is 0, so we will dot it somewhere. And the total credit entries of the capital account is $21,000. $21,000. So after this, then we said that we are to balance off both sides with a greater total. So among these totals, we are to balance off both sides with the higher or the greater total. So the greater total among the two is the credit entries total, which is $21,000. So we balance off both sides. So we balance off both sides with the $21,000. $21,000. Then after this, the next step also says that after balancing off both sides with a greater total, then you need to find the difference among the two totals and put the difference on the side with a shortage. So you find the difference between these two and put the difference on the side with a shortage, which is the debit side in this case. So the difference is still $21,000. So the difference will be inserted here, and it will be named balance C/D, and it will be dated as 31st December 2022. It is 31st December 2022 because that's the last day of the accounting period. When an accounting period begins on 1st June, the last day of the accounting period will be 31st May. But when an accounting period begins on 1st January, the last day of the accounting period will be 31st December. Okay, so after this, then we said that after putting the difference on the side with the shortage and naming it balance carried down, then you need to bring this same difference to the opposite side and we will call it balance brought down. So we will bring this same difference to the opposite side after the total, and it will be named as balance B/D. And these two will be dated as 1st January 2023, because we said earlier that balance brought down represents the opening balance in the next accounting period. So this will be the opening balance of our capital account in the next accounting period, which is 2023. Okay, so we follow the same step in balancing of our cash account, and firstly we will ascertain our total debit entries and our total credit entries. After that, then we will close up both sides with a greater total. We find the difference among the two totals and put the difference on the side with a shortage, and it will be named as balance carried down. After that, then finally we will bring the same difference to the opposite side after the total, and it will be named as balance brought down. So the total debit entries of this cash account is $53,000. So it will be dotted somewhere. $53,000. That of the credit entries total is also $1,000. So after this, we are to close off both sides with a higher total. So we will rule a line and we will close off both sides with $53,000. After this, then we are to find the difference between these two totals, and the difference will be inserted on the side with a shortage, which is the credit side in this case, and the difference will be named as balance carried down. So the difference is $52,000 on the side with a shortage, and it will be called balance C/D on 31st December. So this same difference will be sent to the opposite side after the total, and it will be called balance brought down, to be dated as 2023 1st January. Okay, so we will do the same to the rest of the accounts. So the total debit entries of the furniture account is $21,000 and the credit entries is 0. So we close up both sides with $21,000 and it will be named as balance C/D. BAL is also accepted. So this same difference will be brought to the opposite side after the total, and it will be called balance B/D, $21,000, but it should be 2023. Okay, so in Safari's account, since there is only one entry on the debit side, that will be the total of the debit entries, and that will be the greater total. So we close all both sides with a $100,000. You can just rule two lines under it to show that the account has been closed. So this same difference, 2023, 1st January, balance B/D. So with sales to the total debit entries is 0 and that of the credit entries is $67,000. So the greater total is the credit side, which is $67,000. On Safari's account too, the same thing will be applied here. $100,000 and 0. So on sales account too, we will do the same. So with Ginger's account, we will do the same. So we first find the total debit entries and that of the credit entries, and after that, we will close up both sides with a greater total. So the total debit entries is $50,000, and that of the credit entries is also $50,000. So what this means is that since the total debit entries is the same as the total credit entries, then we will close off both sides with a $50,000, and in this case there will be no balance or balance carried down nor balance brought down. So we will close off both sides with a $50,000, but in this case there will be no balance brought down or balance carried down, because the difference between the two totals is what gives rise to the balance brought down and the balance carried down. Okay, so now we are done balancing of all the accounts. So what's left is the extraction of the trial balance. And one thing that you need to be mindful of is that a trial balance is not an account, but a list of account balances. So what it means is that this is the format of a trial balance. Under the particulars is the name of the account in question. So we are saying that a trial balance is only a list of an account balances. So what it means is that when an account does not have a balance, it will not appear in the trial balance. So an account like the Ginger's account, which automatically balanced, or which the total debit entries automatically equal with the total credit entries, it will not appear in the trial balance because it does not have a balance. A trial balance, as we said earlier, is a list of account balances extracted from the ledgers that's used to prove the arithmetical accuracy of the bookkeeping. So what this means in simple terms is that after preparing the trial balance and the debit or the total of the trial balance agrees with the total of the credit balance, then it means that the bookkeeping is accurate and that is free from error. But that's not always the case, because there are some errors that do not affect the agreement of the trial balance. Example of such an error is the error of omission. More light will be thrown on when we get to correction of errors and suspense accounts. So for now, let's prepare our trial balance, and we are saying that under the particulars, only the name of the account in question will be written there. And after that, you check to see if the account is a debit balance account or a credit balance account. But before then, an account is said to be a debit balance or a credit balance depending on the position of the balance BD. So a typical example is the furniture account. This furniture account is said to be a debit balance account, or the furniture account is having a debit balance because the balance BD at the end of the day is on the debit side of the account. But let's take our sales account for instance. This sales account is also a credit balance account, or is having a credit balance because the balance BD is on the credit side of the account. A balance BD will be on the debit side of an account if the total debit entries of the account is greater than the total credit entries of the account. So we can take the sales account for instance. The total debit entries we had was 0, and that of the total credit entries was $67,000. So since the total credit entries is greater than the total debit entries, then automatically the balance BD will be on the side with a greater total. So that's why the balance BD is on the credit side of the sales account. So after writing the name of the account in question under the particulars, then you check to see if the account is having a debit balance or a credit balance. If the account is having a debit balance, then the figure or the balance of the account will be written on the debit side. But if an account is having a credit balance, then the balance of that account will be written on the credit side of the trial balance. But after everything, the total debit entries of the trial balance needs to balance with the total credit entries. And if you do so, then it means that our bookkeeping is accurate and that it's free from error. But mind you that I earlier said that that is not always the case because there are some errors that do not affect the agreement of the trial balance. So firstly, let's begin with the capital account. Our capital account is having a balance or a credit balance of $21,000. So we will write capital under the particulars and $21,000 on the credit side of the trial balance. Also, our cash account is also having a debit balance of $52,000. So our cash will be written under the particulars and $52,000 under the debit side of the trial balance. Our furniture account, on the other hand, is also having a debit balance of $21,000. So furniture, $21,000. The purchases account, on the other hand, is also having a debit balance of $100,000. So purchases, $100,000. And that of the sales account is also having a credit balance of $67,000. So we have our sales, $67,000. Safari's account is also having a credit balance of $100,000. Safari, $100,000. And sales returns is also having a balance of $15,000 on the debit side. So sales returns, $15,000 on the debit side. And finally, we have Ginger's account. But Ginger's account will not appear in the trial balance because it does not have a balance. So after this, then we need to sum up all the debit entries and we sum up all the credit ones to see if the total of the debit will agree with the total of the credit. So in summing up the debit entries of the trial balance, we had $188,000, and that of the credit side also give us $188,000. So we are done. So since the debit entries of the trial balance agrees with the credit entries, then it means that our bookkeeping is accurate. So as we keep solving more questions, you will get to realize that there are certain categories of accounts that are always having a debit balance, and there are also certain categories of accounts that are always having credit balance. Example of those categories of accounts that are always having a debit balance is the asset account. So we can see the furniture account is having a debit balance, and that of the cash account is also having a debit balance. But there are also certain categories of accounts that are also having a debit balance, but they are not asset accounts. An example of such accounts is the expenses or expenditure account. The expenses account is mostly or always having a debit balance as well as the income owings account. And also, there are certain categories of accounts that are always having credit balance as you balance off the account. Example of such accounts, the provisions account, the capital account, the liability account, and even the income account. So all these categories of accounts are mostly or always having credit balance, or they are credit balanced accounts. You end here, and until we meet again, it is bye for now.